Welcome to this at-home edition of the Stock Play of the Day. Today's stock is Square, symbol is SQ. We'll discuss, should we pass or should we play? Hello, my name is Brian Overby. I am the Senior Options Analyst at Ally Invest.
And I'm Lindsey Bell, Chief Investment Strategist at Ally Invest.
Well, Lindsey, kind of interesting. We had a couple of up weeks in the S&P 500 index, and it's very interesting considering the jobs numbers that we saw last week. So going into this week, I'll pull up the chart in the S&P 500 index. What are you seeing? What's going on?
Yeah, we got a little red this morning in the market, so we're under a little pressure after what was a really good day on Friday, Thursday and Friday actually. Both were very good days in the market, and like you said, the jobs number on Friday it was a big number, but the number came in better than what most had expected. So even though unemployment shot up above 14%, we will see what the months of May and June go. And I think that right now this is a market that continues to really be technically driven. You're also starting to see, the coronavirus trends that's happening there still also weigh on the market or boost the market depending on the news that you're getting. And the news that we've recently got is that we're starting to see a spike in countries like South Korea and Singapore and Japan, who we thought were past the worst of their current coronavirus pandemic, as they've opened up their economies to people to get things going again. And so that questions how we're going to reopen the economy here in the U.S., how quickly it can be done, how quickly we can get back to normal pre-coronavirus levels. So that's why in the market, I also think there's a little bit of China trade tension with President Trump comments going into the weekend. So that's still an underlying tone within the market too. So, like you said at the intro, we had a good week last week, ended in green. And so we're just taking a little off the table, I think, this morning, while the market determines the direction that it wants to go in. But, I did mention how technically driven this market continues to be while there's still uncertainty, especially around the fundamentals, Brian. And, we've been looking at the NASDAQ and the 20-day level on that index, as well as the S&P 500. What are you seeing there in the NASDAQ today? Some interesting trends, right?
All right, so I mentioned the S&P 500 index. One of the things that you did see, even with the jobs numbers where they were, is that this right here is a 20-day moving average, a simple moving average, and we're actually seeing that it held. And we had the market come down, bounce off the 20-day moving average. The moving averages still seem to be in play. They seem to be levels that you want to look at whenever we break through them. You see, we struggled to get through the 20-day move or the 50-day moving average here. And then we kind of had a run up. Now we came back down. Now we're bouncing a little bit off the 20-day, and it's running right along with it. Now this is the 200-day moving average in the S&P 500 index. Obviously, if we can be above those moving averages, it's showing a little bit more momentum in the marketplace. And we also saw the VIX index actually make a break to the downside. For the first time, we saw it go below 30 in forever, it seems, at this point in time. But that just kind of shows that there's less uncertainty in the marketplace, and that's what I'd really take from it. 30 is still a high volatility relative to its mean. The average of the volatility index overall in normal times is around 15%. So we're still quite a bit higher than the mean on basically a 5-year basis if you look at where the VIX is at over time. But it's a good sign that we came down. That means concerns and fears are waning a little bit. And then you mentioned the NASDAQ index, and here's the chart on the NASDAQ. And I'm going to zoom in. Now, this right here is a 3-month chart, but I'm going to zoom in a little bit towards this one level. And of course, I got to move my little box here. Let me just grab that just so that I can highlight an area. But you see right here, the NASDAQ overall has been leading the move to the upside. They've been a leader, they haven't gone down as hard to the downside as the S&P 500 index, and now we're seeing a strong move, and it's leading the move to the upside. We actually did have to mention the Russell. The Russell actually had a big day on Friday. It was up about 3% relative to or about 3.5% actually, relative to the SPX, which was about 1.5%. So The Russell is a little bit stronger. We see the NASDAQ being a little bit stronger here. And just, it was nice that the 20-day moving average actually held in the S&P 500 index last week. So with that said, in the NASDAQ, we see this gap that came down. This was really the start of the downturn in the markets in general. So this is a real interesting area. Whenever you see an underlying index or even a stock fill a gap, that's usually a good sign. So we'd really like to see it get back up to this 9,500 level. If it gets back to that level, that's showing even more momentum in the marketplace overall, even though we are, there's still a lot of uncertainty in the marketplace, and the VIX being below 30 still is a good sign overall about that uncertainty, but it still means that we're at very elevated levels in the volatility, or i.e. the fear index. All right, so let's jump into Square, the stock of the day today. What are you seeing there?
Yeah, sure. Before I dive into it just from today live, but we'll get to them next week for sure. So make sure you type in any questions or anything that's on your mind over there on the right-hand side of the screen. But with that, let's go ahead and move on to talking about the stock play of the day, which is Square. Square is in the payment processing space. PayPal is its bigger brother, I guess, within the same space. It's been a pretty hot space over the last couple years as people move online for purchases, and businesses also move online as their customers go there. We actually talked about PayPal at the beginning of April when that stock was at the $100 level. Now it's in the 143 range, so 140, 143 range. So it has seen momentum. And what's interesting is both of these stocks, PayPal and Square, reported earnings last week, both rising and popping really right after the earnings report. So Wall Street liked what they saw and heard from these two companies last week after they reported earnings. I don't know if you want to put the chart up there, Brian, of Square. And if we take a look at it, you'll see it's had a good run since it bottomed out. And last week's earnings report, the top line was really impressive, coming in better than what Wall Street analysts had expected. What was really driving that was their Cash app, which is kind of like Venmo at PayPal, which is peer-to-peer payment system. They saw significant strength there. And while the quarter, both at PayPal and Square, were kind of weak given the COVID crisis and the shutdown of merchants and the sheltering in place by consumers, what they both reported was that things rebounded, and they rebounded in a significant way in the month of April. In fact, for Square, since we're taking a look at that stock here, they said that in mid-April, they started things, growth trends starting to improve in mid-April. Their weekly volume for their online stores were up 5 times since the middle of March. Their card not present transactions were now accounting for 50% of their total volume, whereas before the COVID crisis, that was around 33%. And then the Cash app users are now storing $1.3 billion in aggregate on that service. So the Cash app service, we just saw strength there. The other side of their business, however, is what's known as their seller subscription service. So it's merchants using their Square machines to take in orders. A lot of them times you'll see it here in New York City in the coffee shops around here, or other smaller merchants. That part of the business has been slower to rebound because a lot of retail stores still remain closed. So it's almost like a tale of two different parts of their business. They also had to take some credit loss reserves to prepare for losses in that business going forward too. So while the consumer facing online business is doing really well, it's the merchant business that's still struggling a little bit. And on that side, they do have about 48% of their GPV, gross payment volumes, coming from small businesses that they earn less than $125,000 in revenue from on an annual basis. So there is a risk that some of those businesses could close given the COVID crisis, given the unemployment rate where it is. But they're hoping to make up for it on the back end with the Cash App, where they're starting to see some great momentum, similar to what PayPal is seeing. PayPal in the month of April, by the way, said that they had a record month, 7.4 million net new customers in that month. And that momentum has crossed over to the month of May. They said on May 1st, that was their biggest shopping day ever. And it exceeded Black Friday and Cyber Monday records. So it sounds like the consumer's getting back into it with PayPal, and the expectation is that that will follow suit with Square. We're down today on the stock. And again, it's probably just taking a little bit off the table after that big week that the stock had last week. You see that big pop up that Brian's highlighting right there after they reported earnings. But regardless, I think, Brian and I have talked about before, the trends that are in this payment processing space, the trends to moving online are very strong. Even PayPal said that they're seeing the digital transformation happening 3 to 5 years ahead of expectations. And we expect Square to also be a benefit of that trend over the longer term period. So I think while we're seeing this momentum, Brian, there's some technicals within this stock that you also find very interesting. Again, remember, we're talking about the overall market is being significantly driven by technicals at this point in time, given the uncertainty of fundamentals. While we have a little more certainty with fundamentals for Square, there does remain an air of uncertainty. So what are you seeing in the technicals?
All right. Great fundamental analysis of both companies. So let's talk. Today's trade, paper trade in the options world is going to be more of a momentum play. We talked about PayPal. When we did it, we talked it as a fear of missing out. We call it a FOMO trade, in that we were going out into July. We're buying a little bit deeper in the money option contract. And we were saying, well, this allows you the time to have limited risk on the downside, limited relative to buying the stock outright. And it puts a bottom on what you could lose on that position, but you'd still have a position in the marketplace. Okay, so now today, this week, when we look at the chart, we see that after their earnings report, they had a big push through some important levels. Here on a 3-month basis, this is back in March, this is where the stock was hanging around, and this is where it broke through support to the downside. We're back up to that level. So we filled this little gap right here after earnings, and now we pushed actually above that level that was providing support before. Now, right now, it'll be interesting to see if it follows through. We've got a little bit of a down day, but you see this little green finger on the candle means that we did actually go up at a time and actually trade higher than this level. And I'm going to call this level right here. Let me see, right about 75, right about in that level, right close to 75. We'll round it off. So what we're going to look at is a very short-term trade in Square. We're going to hope that this momentum stays and at least stays where it's at or drifts higher. Now, this would mean that if we saw it break out, I'd be more interested in doing a little bit more aggressive play. But today, we're going to sell some of the premium. Because of all the things that Lindsey kind of talked about, there's still some uncertainty in Square, especially relative to PayPal, as far as volatility is concerned. So I'm going to sell some volatility premium. That's going to be our goal here. I'm going to highlight where the volatility is at in Square, even after that earnings announcement. So the trade that we're looking at is a short put spread. And you can see from the profit and loss graph inside the Ally Invest Options playbook that we are bullish on the trade. We're going to be selling a put here with the market up in this range. So the market is above where the put strike is at. And then we're going to buy a put down below where that market is at. So we're going to buy a put to protect us. We're going to sell a put and bring in some premium. And we're going to do this on a real short-term basis here, just and hope that this momentum stays after this earnings announcement in both stocks, actually. But it would be ideal. I mean, the one we're going to be concerned about because we're doing the paper trade on is Square. All right. So short put spread in Square. So let's go back to the Ally Invest option chains. And here what we see right now, 74.71. It's down $1.34 today. I guess it opened about that range, ran up a little bit. Now it's back down to that range. So before we get on this call, it looks like it's came off a little bit, but that's all right. 74.72 is where the stock is at. I'm going to look at the shortest term expiration. And once again, we're doing this just because we see a lot of implied volatility in this underlying. That's the concept behind it. So this is a little bit more speculative trade than we did in PayPal back in April. The expirations that we have to choose from, we have a May expiration, which is the normal, the normal monthly expiration, the third week in May, which is May 15th, the third Friday. So that's the normal monthly expiration. And then we have some weeklies around it. But we have such high implied volatilities where even though they've announced earnings, we still see, if I highlight this, this is the put chain inside the Ally Invest option chains. This is the implied volatility column. If I just look at the most at the money implied right here, we're still around 63, 64% implied volatility. That's fairly high, just in an underlying that just announced earnings last week. So we're going to try to take advantage of that. We're going to look at the 72 strike. This is going to be literally a 4-day trade. And I'm going to mention that we're going to look at this trade on Friday in the Stock Play of the Day Overtime, a new segment that we started here on the Ally Invest YouTube channel. And I'm going to sell this 72 strike put, and I'm going to buy the 70 strike put. I'm going to limit my risk. I'm going to bring in a small premium, but a very short trade. Now, if I look at this, I'm going to highlight one little thing here. The delta is about 29 on this on the option contract that we're selling. Okay, quick and dirty way to see probability of that stock finishing at least 1 cent in the money. Doesn't necessarily mean you're going to make money on that position overall, but this is delta can be looked at as probability. Saying there's about a 30% chance of that going below, at least finishing 1 cent below that 72 strike. So a 70% chance that it would finish above. Now that's just based off of delta, and it's all theoretical in nature, but I was targeting something below 30 when I was trying to pick a strike. I use delta as a gauge to try to determine some probability. So this is going to be the paper trade for the week. And let me scroll down and I'll highlight it. And we'll look at it in the profit and loss calculator here. But we have a 2-point wide trade. We have a 40. It's trading right now at the midpoint of 44. Okay, so the maximum we can make on the trade is the net credit received. If we can fill at the midpoint, there's never a guarantee that we can. That means for every 1-by-1 trade that we do, we would bring in, well, right now we'll call it 45 cents. All right, that will be our point, just to make the math simple. The risk here is that you have a 2-point wide spread. That's the maximum that it could trade for. And if you had to close it out for that $2, that means that you would lose $1.55 on this trade. So the risk reward isn't with you, but one of the things that is with you is that you have a higher probability, because we're out of the money, that that stock won't come down and finish below that strike. And we have a huge rate of time decay. If the stock just stays where it's at, every day that goes by with this high implied volatility, we're going to see a large rate of decay. In other words, this net credit could start whittling down even after 1 day's worth of trading, and the stock just stays where it's at right now. So that's the benefit of doing a short put spread or a credit spread in general. When you're using out of the money option contracts, you have time decay as your friend. It's your benefit. It's a benefit to the option seller, and it's a detriment to the option buyer. So we just need the stock to either stay where it's at or drift higher, and then we could decide what we wanted to do after that. So it's a 4-day trade, and we would not get this type of credit if we didn't have such high implied volatility. The fact that we could do a 4-day trade, be down at that 72 strike, and still receive a 45 net credit, it has everything to do with the volatile environment of the marketplace, and it's kind of, it's still elevated considering they announced earnings last week. All right, so I'm going to put the paper trade in the right rail, right over here. Scroll down. We're going to call it 45 cents. I'll click on that midpoint, and that'll put 45 cents as a net credit into the account. And we're looking to buy to open the May 15, 2020 put. We're going to buy the 70 strike. And then we're going to sell that same expiration 72 strike. It's a 4-day trade. It's going to be done by the end of the day on Friday. Pull it in for a net credit of 45 cents to the account. If we look at the profit and loss graph and we compare this to the profit and loss graph, I got to move my, apologize here, I'm working off of one screen. on this at-home edition of the stock play of the day. And we see here's where the underlying stock is at. So we want it to stay above 72. Now, compared to the profit and loss graph inside the options playbook, that's the white line that we're showing you. That's the dash line. That's at expiration. This is what it looks like right now. The multicolored line is showing you the profit and loss graph right now based off of current market conditions. It's a theoretical model that's doing that. And you see that as long as the stock stays above our short strike here at 72, we're doing really well overall. And if we come down between 72 and 70, well, that's where our risk is at. And if it happens right away, there's not as much risk as if it happens closer to the expiration date. And the risk today is highlighted by that multicolor line. The risk at expiration is highlighted by that dotted line. But it's also true, this is what we mean about time decay. If I take this and let's go down to 1 day remaining, I'm gonna hit days to go and I'm gonna make it 1 day remaining and we're gonna graph this trade. Now we're getting closer and closer to that line. So this line starts bending and eventually at expiration, well, we're gonna go to 0 days, which we've been doing a short put spread. All right, so that's the paper trade for this week. I am going to stop sharing. We'll go back and we'll do a little bit of a summary. Last week, what was the underlying stock that we were looking at last week, Lindsay?
Barrick Gold, GOLD.
All right. So overall, last week we were looking at Barrick Gold. We had a couple of questions. A couple of people talked a little bit about the oil. Did we have a general question about Barrick Gold last week?
We didn't get any questions. We got a couple comments, so we like seeing that. We like you guys participating with us. I know you gave an update on the trade on Friday. Again, Brian is doing a stock play of the day overtime on Fridays, live at noon, to just give you an update on the trade that we talk about on Monday. So this Friday, be sure to check it out. Tune in, because he's going to give you an update on this trade. And it should be pretty interesting, Brian, right? Because this time you only did a 4-day trade, pretty short and sweet.
Right, we're doing a momentum trade, which is much different than what we did in PayPal, which is in the same industry back in April. That was a fear of missing out trade, using options to try to actually reduce your risk. So here, we're actually doing a momentum trade. We're trying to segue off the fact that they had such a good earnings report last week and that we had that pop up and we filled a gap in this underlying stock. And then I also want to make sure you put your questions, as Lindsay mentioned a little bit early on, inside the chat box. We will look at them. We will address them on this at-home edition of the stock play of the day. And don't forget to check out my overtime. We could see it last week. We talked about it on Friday. This week we'll be doing the same thing. So thanks for coming, everyone. That's going to be it for this at-home edition of the stock play of the day. Don't forget to click subscribe and ring the bell so you get all the updates. And hopefully we'll see you this Friday. Thanks for coming.